Hello and welcome to my video presentation on my analysis of whatif.com's strategy and accounting. But first, before we begin, feel free to help yourself to a cup of tea or any refreshments. Anyway, onto the strategy analysis. Whatif operates in the Australian travel agency industry. This industry is very competitive, with companies offering almost identical products and services, and with only a few examples of competition through differentiation. In this industry, consumers have extremely low switching costs, as the entire industry operates mostly online. The rate of new entrants is medium, as currently the only major barrier to entry are legal requirements. And also, with recent improvements in internet security, customers are increasingly willing to trust new and international businesses. The threat from substitutes is extremely high, with customers able to easily bypass the travel agency services and book directly with hotels and airlines. Bargaining power from customers is very high. As explained before, competitors offer identical products and the industry is internet-based, so the search cost faced by consumers to find cheaper alternatives is minimal to none. The bargaining power of suppliers will differ depending on how the travel agency sources its products and services. Some companies act as wholesalers, buying in bulk from the hotels and airlines, and then on-selling these services at a marked up price. While others, such as Whatif, operate on a commission basis, charged to both the customers and also the suppliers. Recently, airlines have been able to flex their bargaining muscle with the commissions they pay to travel agencies for domestic airline tickets falling drastically. However, due to the unique business model of Whatif, which I will be explaining in a moment, suppliers have less bargaining power over Whatif than other commission-based agencies. The competitive strategy Whatif follows is a differentiation strategy. Whatif offers a sale platform where hotels and airlines can sell their services that are close to their date of use. However, the main difference is that Whatif's operation allows hotels and airlines the ability to change their price of their service in real time. This allows them to access a large customer base and then quickly sell off at a discounted price rooms and tickets that would otherwise have gone unsold. So far, this strategy has proven successful. Whatif has grown its revenue and been able to increase its market share for accommodation from 6% in 2006 to 10.4% in 2009. Now, Whatif owes its ability to create value and profit from its unique way of acting as an intermediary between the hotels, airlines and customers. Whatif gives customers travelling in the short term access to the best priced rooms and tickets available in Australia, and Whatif gives the hotels and airlines the ability to gain some revenue on what would have otherwise been unsold rooms and tickets. Whatif has expanded this operation from only selling rooms that would expire in 7 days to selling rooms and flights with a lead-up time of 6 months before expiry. And Whatif has also used its expertise in online travel to create value in other related areas such as travel insurance, car hire, corporate travel, and somewhat limited international travel, by setting up and buying existing internet travel businesses. While Whatif has been successful so far, it is inflexible to changes in the market, especially rises in the value of the Australian dollar, and its innovative business model can easily be copied by competitors, and if this happens, Whatif will most likely experience weaker future performance. Well, that concludes the strategy analysis part of this presentation, and now for something completely similar. Anyway, on to the accounting analysis. The quality of Whatif's accounting is of a high standard. The director's reports included in the financial reports clearly explains how Whatif is affected by changes in the industry and the general economy. The key accounting policies are clearly explained, as well as any changes, and importantly, the quarterly and yearly reports match up and have been audited by Ernst & Young. The main influences on Whatif's accounting comes from its shareholders. Whatif has very little debt and is financed mostly through equity, so its directors have a strong incentive to use financial statements to impress investors. The main source of accounting noise is from how Whatif calculates its accounts receivable. In the financial statement, accounts receivable represents the price the room or the airline ticket has been sold for, but does not separate out the amount that Whatif will have to give to the hotel or airline once the customer pays. Also, some IT expenditure that represents future benefits for What If is recorded as an expense. And also, as What If followed the Australian accounting standards, goodwill from its takeovers of travel.com.au and Asia Web Direct in 2008 have been recorded as assets. What If's key accounting policies relate to how it recognises revenue from bookings for accommodation and flights. These accounting policies are very sensible and cause very little forecast error, as the commission from a sale is only recorded once the customer has booked into their hotel room or received their ticket. And What If's accounting flexibility is restrained by the Australian accounting standards and the international financial reporting standards. Now, the only major red flags for What If was in 2011, for the first time, What If sold off financial assets. It was a small amount relative to their cash on hand, but no explanation was given in the accounting notes for this one-off event. In my report, the accounting distortions I identified were firstly how goodwill is impaired every year, and secondly how accounts receivables are recorded. I decided to amortise goodwill at a constant high rate to capture the innovative and quickly moving industry What If is in. However, unfortunately, there wasn't enough information in the accounting notes to modify accounts receivable so that it only represented the commission What If had received. Well, that concludes my report on whatif.com's strategy and accounting. Now, if you'll excuse me, I'm going to get some more ice cream.